Hello, and welcome to the Cryptocurrency News Channel. Today we're going to talk about an unlikely suspect that may push Bitcoin's market cap towards or even past 1 trillion. We're going to look at this article, and then I'm going to add some of my thoughts whether I agree with this or not. So many people think institutional investors will push Bitcoin past 1 trillion. Now, for Bitcoin to get past 1 trillion, it would have to be over $50,000 per Bitcoin, over 2.5 times the maximum last time. And of course, if that happens, everything will go bull market with it, and we will be very, very well off, regardless of which coin we are actually invested in. Just a side note, the pump in altcoins might be a delay following the pump in Bitcoin, because a lot of times Bitcoin tends to pump first, and then the altcoins tend to catch up. So at the height of the late 2017 run, Bitcoin market cap hit highs of 327 billion. Near 1/3 of the coveted 1 trillion level. That would be a monumental milestone for the cryptocurrency. And it says if it's ever reached. I do believe it will be reached probably during the next bull run, because I do think the next bull run, Bitcoin's market cap will be more than double its previous bull run. And it will hit $1 trillion next time, bringing the entire cryptocurrency market past $2 trillion. So he thinks that this cash is going to come from retired people, because not from institutional investors, but from retired people, because 90% of retirees over age 50 in the US don't know what Bitcoin is or aren't interested in learning more about the nascent technology. And this lack amongst a group that controls a significant amount of US wealth likely stems from the technological complexity surrounds the technology. Despite this, the advent of regulated and easy-to-use crypto exchanges in combination with growing involvement in the industry from U.S. regulatory authorities may lead to more retirees to direct a portion of their wealth into the crypto markets. Now, I don't really think so, because I do think there is something that will actually push Bitcoin over $1 trillion, but I don't think it'll be retirees directly investing their money into cryptocurrencies. And the reason why is retirees are generally fairly safe with their investments. They have a very nice, I guess if you're desperate and you're running out of money, you might splash into crypto. But for those that actually have, my parents have a very nice nest egg, and they're not going to invest in that nest egg in a highly volatile asset. I would definitely advise them against doing that if they asked me. I would be like, no, you should probably just do it, put it in a mutual fund or something. Because I don't want them suddenly dropping their investment by 50% because the market went bad. I don't think it's a responsible way to invest your retirement income if you're already retired and you are living off of that. If you are living off a certain pool of money, you should not be investing that in a highly volatile market, because you are constantly drawing from that money to actually use, and it's just not a wise thing. Something like a high growth, high volatile market, you need to be someone around my age, maybe, or in their 40s, possibly even 50s, but you've got a decade or more until retirement. Because then you have time to wait for a good market to actually cash out on. Because if you're in your 60s and you put all your retirement in Bitcoin, you might actually need that money soon, and you might be forced to cash out on a bad market. So that's just generally not a very good idea. It's the same way with your retirement funds. Younger people tend to choose the ultra aggressive routes when investing in stocks. For the retirement fund, older people tend to be more conservative to basically account for the possibility of a bear market in the years that they retire, so they go much safer. So I don't think already retired people or those who are near retirement are going to put a large amount of their money into cryptocurrencies. However, more funds are actually investing in cryptocurrencies, and that means the retirement funds like Fidelity of younger people like myself or other people, maybe in their 30s, 40s, that have Fidelity or BlackRock. And I think I've heard some rumors from that BlackRock might invest some of their assets into cryptocurrency. So they might offer cryptocurrency as a part of a very, let's say, aggressive investment package for your retirement. And they control a lot of money. And I think younger people are more willing to do that. So as my generation, basically the boomlets or the millennial generation or whatever, comes up and we invest more money into retirement assets, we might see the choice that we can invest 10% of this into cryptocurrencies offered by BlackRock or Fidelity once regulations come through, which they will probably in a couple of years. Once that actually happens, I do expect a large surge in Bitcoin price because there's going to be a lot of, retirement, even pension funds coming into cryptocurrency, and that is a lot of money compared to how much there is right now. Like Fidelity controls 7 trillion. Even if 1% of that goes into that, that's $70 billion. Same for BlackRock and a lot of the others. So my viewpoint is it's not going to be retirees like this article says, because retirees, like I said, aren't going to invest their savings in a highly volatile asset that can tank anytime. Younger people like myself or people in the 30s and 40s are much more likely to do that. And I think the crypto investing options via BlackRock and Fidelity for retirement might actually be appearing in the next 5-10 years. And we'll still be young enough at that time to consider those options and put some of our money in those options for very, very high growth. So that's how I think we're going to get over the $1 trillion hump. So that's the report for today. Check out my Twitter. It's my description. Also, like and subscribe, and also retweet or share this on social media if you like my content. Thank you and have a nice day.